Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Aina Balkis binti Imran. My metric number HFT20303. Today I want to talk about Intro Sunway Berhad and IOI Properties Group Berhad, which are two major companies in Malaysia involved in the hospitality, tourism and wellness industry. Their development support Malaysia tourism ecosystem and service sector growth. The background of these companies provides context for future financial analysis. Background of Sunway Berhad. Sunway Berhad was founded in 1974. It is a divisive Malaysia company. Sunway City is its main development. The company operates hotel, theme parks, and shopping mall. Background of IOI Properties Group Berhad. IOI Properties Group Berhad is leading property developer in Malaysia. The company was listed in 2013. It is involved in hospitality and leisure development. IOI City Mall is one of its major projects.
Assalamualaikum and hi everyone. I am HFT20303 binti Ahmad Izal and my metric number is H2482968 and I'm going to presenting trend analysis for Sunway Berhad's financial ratios in 2023-2024. For liquidity ratios, current ratio increased from 1.08 to 1.28. This shows that Sunway now has more asset to cover short-term liabilities, mainly because current liabilities decrease. So next, for quick ratio, improve from 0.80 to 0.88. This means the company is getting better at meeting short-term obligations without relying on inventory. For cash ratio, rose from 0.28 to 0.43. More cash is available to pay immediate obligations, showing stronger cash management. And for the net working capital, jumped from 703 million to 2.88 billion. This means Sunway has more excess current assets to run operations smoothly. Overall, Sunway's short-term financial health improved and it's better prepared to meet immediate obligations. For solvency ratio, the first one is debt to equity, slightly increased from 0.98 to 1.04. Sunway is using a bit more debt to finance operations, which raises long-term financial risk. And next is debt to asset, rose from 0.48 to 0.50, showing half of assets are financed by debt. And the last one is interest coverage, fell from 2.68 to 2.40, meaning the company's ability to pay interest slightly weakened, but is still able to cover interest expenses. So, the implication is long-term risk increase slightly, but Sunway can still manage its debts. The next one is efficiency ratios. The first one is inventory turnover, increased from 0.70 in 2023 to 1.60 in 2024. Sunway is selling and replenishing inventory faster, improving efficiency. The next one is efficiency ratios. The first one is inventory turnover, increased from 0.70 in 2023 to 1.60 in 2024. Sunway is selling and replenishing inventory faster, improving efficiency. The next one is account receivable turnover, increased from 2.39 to 2.62. The company collects payment faster, which helps cash flow. And the last one is total asset turnover, improved from 0.21 to 0.25. Sunway is using its asset more effectively to generate revenue. Sunway is also becoming more operationally efficient. So the last one is profitability ratios. Start with gross profit margin, dropped from 32.31% in 2023 in 2023 to 23.27% in 2024, meaning production costs increased relative to revenue. And the next one is net profit margin, increased from 13.95% to 16.25%, showing expenses are well controlled. The ROE is increased from 5.33% to 8.54%, meaning the shareholders' equity is generating more profit, and ROA increased from 2.99% to 4.06% in 2024, showing the company is generating profit more efficiently from its asset. So despite higher production costs, Sunway improved overall profitability and create more value for shareholders. Summary, Sunway Berhad improved liquidity, efficiency, and profitability from 2023 to 2024. Solvency risk increased slightly, but overall the company is in a stronger financial position.
Hi, I am Adlina Husna binti Zakaria. My matric number H24A3787. The next slide is trend analysis for company IOI. Firstly, the current ratio for IOI properties in 2024 increased more than in 2023. In 2024, it increased due to a significant reduction in current liability, and in 2023, current assets were not enough to cover current liability. Next, for the quick ratio for a IOI company, it showed a very significant increase in 2024 because in 2024 it showed that the company could meet its short-term obligation easily without relying on inventory, and in 2023 it showed very weak short-term finance. In addition, the cash ratio showed that the cash ratio for IOI company in 2024 increased more than in 2023 because in 2024 there was sufficient cash and not enough in 2023. Finally, for the liquidity trend for net working capital in 2024, IOI company had excess current asset and was much stronger than in 2023. The debt-to-equity ratio showed a slight increase in 2023 compared to 2024 because in 2023 the company was less dependent on debt. Next, the debt-to-asset ratio showed a further increase in 2024 because the company used more debt in 2024 compared to 2023. Finally, the solvency trend for the interest coverage showed a further increase in 2023 because the IOI company had excess income to pay its interest expenses, and in 2024 experienced difficult because its expenses were insufficient. Efficiency trend. In 2024, IOI company showed a higher inventory turnover because IOI company used its inventory more educationally, and in 2023 it was a bit slower when using its inventory. Next, for account receivable turnover, in 2024 it increased again because IOI company collected payment from customer quickly, and in 2023 it experienced weakness due to lack of efficiency in collecting debt. And finally, the efficiency trend for total asset turnover in 2024 increased by 6 cents compared to 2023. Finally, profitability trends. First, gross profit margin show that in 2023, costs increased faster than in 2024 due to lack of cost control and good pricing. Next, the net profit margin. Net profit margin show that in 2024 it increased more because the company was efficient in controlling higher expenses compared to 2023. In addition, return to equity (ROE) in 2024 increased again in 2023 because the company generated higher profit compared to shareholder equity. And finally, return to asset (ROA) in 2024 show that IOI companies are efficient in using their asset to generate profit compared to 2023.
Hello, my name is Angeline Hobunchi and my number chemistry is H24A3219. So today I will be discussing about cross-sectional ratio, which is liquidity and solvency ratio, to further compare of final position of Sunway Berhad and IOI Property Berhad for the year of 2024. Liquidity ratio measure a company's ability to meet its short-term obligation. So Sunway Berhad recorded a current ratio of 1.29, while IOI Property Berhad achieved a much higher current ratio of 4.94, indicating that IOI Properties is in a stronger position to cover its short-term liabilities. Similarly, the quick ratio for Sunway Berhad stood at 0.88 compared to 4.06 for IOI Property Berhad, showing that IOI Property has significantly higher liquid asset available without relying on inventory. In terms of cash ratio, Sunway Berhad recorded 0.43, while IOI Property Berhad recorded 0.94, further indicating that IOI Property has better immediate cash availability. Additionally, Sunway Berhad net working capital amounted to 2880512, where IOI Properties Berhad recorded a much higher net working capital of 8588336, reflecting stronger short-term financial stability. Moving on to solvency ratio, which assess long-term financial risk, Sunway Berhad recorded a debt-to-equity ratio of 1.04 compared to 0.91 for IOI Property Berhad, indicating that Sunway Berhad relies slightly more on debt financing. The debt-to-asset ratio for Sunway Berhad was 0.49, while IOI Property Berhad recorded a slightly lower ratio of 0.47, suggesting that IOI Properties has marginally lower financial risk. Finally, Sunway Berhad interest coverage ratio stood at 2.40, where IOI Property Berhad recorded a significantly higher ratio of 119.82, indicating that IOI Property is far more capable of meeting its interest obligation. Overall, IOI Property Berhad demonstrate stronger liquidity and lower long-term financial risk compared to Sunway Berhad.
Hello, my name is Potency Matrix H24A3318. Next, I will present a cross-sectional analysis comparing Sunway Berhad and IOI Properties Berhad focused on profitability and efficiency ratio for the year 2024. In terms of profitability, Sunway Berhad record a gross profit margin of 23.27%, while Iowa Properties Berhad achieved a higher margin of 57.3%, indicating that IOI Properties is more effective in controlling its cost of sales. Similarly, Sunway Berhad net profit margin stood at 16.25% compared to 17.3% for IOI Properties Berhad. It showed that IOI Properties is more efficient in converting revenue into net profit. When looking at return on equity, both companies perform at a similar level, with Sunway Berhad record 8.55% and IOI properties perhaps record 8.54%, suggesting that both generate nearly the same return for shareholders. However, IOI properties perhaps slightly outperform Sunway Berhad in return of asset, with 4.49% compared to 4.06%, indicating marginally better asset utilization for profit generation. Moving on efficiency ratio, it showed that Sunway Berhad demonstrates stronger operation efficiency overall. Its inventory turnover ratio of 6.96 of 0.96 was higher than IOI properties Berhad. There is 0.65. It shows that Sunway Berhad have a better inventory management. In addition, Sunway Berhad record an accounts receivable turnover of 2.62 compared to 0.98 for IOI properties Berhad. It showed that Sunway Berhad is more effective in collecting payment from customers. Furthermore, Sunway Berhad's total asset turnover of 0.25 was significantly higher than IOI properties Berhad. 0.064, which suggests that Sunway Berhad utilized its asset more efficiency to generate sales. For conclusion, IOI properties Berhad show stronger profitability performance, and Sunway Berhad show their stronger operational efficiency. This highlights both companies have a different strength in their overall financial performance.
Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Fadila binti Azizun and my metric number is H24A3481. I will present an overall analysis of the financial performance of Sunway Berhad and IOI Property Group Berhad for the year 2024. In terms of liquidity, IOI show a much stronger position and is more able to meet short-term obligation than Sunway. In terms of solvency, both company has almost the same level of debt, but IOI is more stable due to high interest coverage ratio. In terms of profit, IOI recorded a better profit margin, while the return on asset and equity for both companies are almost the same. However, in terms of operational efficiency, Sunway show a better performance without high asset turnover and inventory. Overall, IOI Property Group Berhad is the company that performed better in the year 2024. Although Sunway is more efficient in terms of operational. That's all for me. Thank you.
My name is Nuruliana binti Amarudin. My metric number H24A2935. So, I will continue with this slide. This slide explains the conclusion of the analysis. Both Sunway Berhad and IOI Property Group Berhad show strong financial performance. It's with strength in a different area. Sunway Berhad performed better in efficiency and solvency, indicating stronger asset utilization and better long-term debt management. IOI Property Group Berhad show a better liquidity and profitability, reflecting stronger short-term financial stability and higher profit generation. Overall, IOI is suitable for investors seeking higher profit and liquidity, while Sunway suit investors who prefer long-term stability and operational efficiency.